Welcome everyone. To begin, let's set the stage. You do not need a paycheck to open a bank account. In this video, I'll guide you through why that's true, how to choose the right institution, hidden fees to look out for, and practical steps to get started today. We'll also include quick quizzes to check your understanding. Let's move smoothly into our agenda so you know what's coming. Here is our plan for today. First, we will bust the myth that you need a salary to open a bank account. Next, we will discuss the benefits of having an account and how digital money moves. After that, we will examine hidden fees, compare credit unions and traditional banks, and walk through a step-by-step process to open an account even without a paycheck. Then, we will finish with a shop-around checklist, quizzes, and key takeaways. Let's start with the myth. Transitioning from the agenda, let's address the myth. Many people believe banks only accept customers with regular payroll deposits. And in reality, students, freelancers, and anyone managing personal funds can usually open a basic, current, or checking account. The key difference is not eligibility to open, but the conditions to avoid fees. We will explore that nuance shortly. For now, keep in mind, employment status does not automatically disqualify you. Now that we've dispelled the myth, let's examine the benefits. First, a bank account accelerates how you receive and send money compared to cash or paper checks. Second, it increases safety by reducing the risks associated with carrying cash. Third, digital transactions often cost less over time than money orders or check cashing services. Fourth, accounts create a paper trail that helps with budgeting and tax reporting. Finally, opening an account is often the first step toward other financial tools like debit cards, mobile wallets, and transfers. With that context, let's see how digital money actually moves. To understand the practical side, consider the typical digital flow. A payer initiates a transfer via ACH, Zelle, or a card network. Your bank receives the transfer and credits your account balance. Next, you can pay a vendor using your card or another transfer method. Afterward, the bank confirms settlement and updates your balance and notifications. This sequence illustrates how an account places you at the center of modern payment networks. With the basics in mind, let's anticipate the main pitfalls. Fees. However, opening an account is not the whole story. Many banks waive monthly fees only if you maintain a minimum balance or receive qualifying direct deposits. If you do not meet those conditions, monthly maintenance fees can apply and gradually erode your savings. Additionally, consider other charges such as out-of-network ATM fees, overdraft fees, and paper statement fees. Therefore, it is vital to choose an account whose waiver conditions you can realistically meet. Next, we will compare credit unions and traditional banks to help you decide. This table summarizes typical fee policies. Basic checking accounts often have modest minimums and low to moderate fees that can be waived with direct deposit or a minimum balance. Student accounts can be low cost or free if you meet the age or enrollment criteria. Credit union checking, often called share draft accounts, can feature lower fees, especially if you enroll in e-statements or maintain membership requirements. Premium accounts offer perks but are costly unless you maintain high balances or large direct deposits. Finally, online-only accounts frequently advertise zero monthly fees, though you should verify ATM availability and cash deposit options. With this context, let's directly compare credit unions and big banks. Credit unions are non-profit, member-owned institutions and often structure accounts to benefit members, resulting in lower fees and more flexible minimums. This can be advantageous if you do not have guaranteed direct deposits. On the other hand, traditional banks typically have robust mobile apps, extensive ATM networks, and frequent account promotions, but may require larger balances or employer direct deposits to waive fees. Therefore, if you lack predictable payroll, a credit union or an online bank with no monthly fee can be a strong choice. Now let's turn this information into a step-by-step plan to open your account. Here are practical steps. First, define the features you need, such as no monthly fee, ATM availability, mobile check deposit, and bill pay. Second, shortlist several institutions, including at least one credit union. Third, verify eligibility and required documents like government ID, proof of address, and SSN or ITIN where applicable. Requirements vary by country. Fourth, evaluate fee waiver conditions and pick one you can consistently meet. Fifth, open the account with a small deposit and enable e-statements, which may reduce fees. Sixth, set account alerts for low balances and potential fees. Seventh, test functionality by receiving a small transfer and making a minor card purchase. Finally, reassess after a month and do not hesitate to switch if unexpected fees show up. Next, let's visualize how to choose the right account with a mind map. This mind map centers on choosing an account when you lack a paycheck. The branches cover goals like no monthly fee, low ATM fees, and budgeting tools. And another branch is income pattern. Irregular or freelance income may steer you toward institutions with flexible fee policies. The institution type branch compares credit unions, online banks, and big banks. The requirements branch highlights identification, address, and tax identification documents that may be needed. The fee waivers branch compares maintaining a minimum balance with alternatives like self-initiated ACH deposits or enrolling in e-statements. Finally, the features branch focuses on the mobile app, ATM network, and cash deposit needs. The mind map suggests credit union basic checking if you do not have direct deposits, online no-fee checking for app-first users, and big bank accounts only when waivers are easy to meet. To turn research into results, work through a simple checklist. First, separate your must-have features from nice-to-have features. Second, compare at least 3 accounts side by side, focusing on fees and access. Third, read the official fee schedule and account agreement to catch hidden conditions. Fourth, look up independent reviews to confirm the mobile app's reliability and customer support. Fifth, make sure the ATM network and cash deposit options fit your routine. Finally, schedule a review in 6 months to confirm the account remains a good fit. If not, switch. Remember, your deposits are valuable to institutions, so ask about fee waivers if you are near the requirements. Before we quiz you, let's include a quick disclaimer. A quick but essential note. This video is educational. It is not financial advice. Account eligibility, documentation, and fees vary by country and by institution. Always read official disclosures and consult a qualified professional if you need personalized guidance. With that in mind, let's test your knowledge with a quick quiz. Quiz time. Question: do you need a regular employer paycheck to open a basic bank account? Option A: yes, banks require payroll to open any account. Option B: no, you can open without a paycheck, but watch fee conditions. Option C: only if you're over 21. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is no. You can open without a paycheck, but watch fee conditions. You do not need regular payroll to open a basic account, but you should pay close attention to fee waiver requirements to avoid maintenance charges. Second quiz question: if you do not have predictable direct deposits, which is often the better starting point? Option A: a big bank's premium checking with a high minimum balance. Option B: a credit union basic checking account. Option C: a prepaid debit card with high monthly fees. Option D: stashing cash at home. Do not pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is a credit union basic checking account. Credit unions are typically member-oriented with lower or more flexible fee structures, which can be helpful when your income is irregular and you lack guaranteed employer direct deposits. Here are the key points. First, you can open an account without a paycheck. Second, the main challenge is avoiding fees, so pick an account with waiver conditions you can meet. Third, consider credit unions and online banks for lower cost options. Fourth, always read disclosures to understand fees and requirements. Fifth, reassess your choice after a month or two and switch if the account does not fit your needs. As we wrap up, let's summarize the journey and your next steps. To summarize, we debunked the myth that a salary is required to open a bank account and highlighted the benefits of digital banking. We cautioned against hidden fees, minimum balances, and direct deposit requirements that may trigger charges. We compared credit unions and banks, then walked through a practical step-by-step opening strategy. Finally, we reinforced the importance of ongoing review. Now, for our final notes. Thank you for watching. If you found this useful, please like the video, share it with someone who needs it, and subscribe for more practical money guides. In the comments, tell us which account you are choosing and why. Your feedback helps others learn too.